Hey everyone, it's Brett from Hope to Prosper, and I'm here at the Liso Summit Trail, about to go hiking with Millie. Yeah, Millie, there she is. And just beautiful day, a little overcast, but nonetheless gorgeous here. So anyways, I just wanted to talk to you today about today's subject, which is my investment strategy for 2024. I hope you enjoy it. All right, thanks for coming along. Lately I've gotten a number of questions about my investment strategy from some of my viewers, including Dan at Dan the Man and Josh at Fast Neat Average. So I usually don't talk about my investments or my investment strategy since it's not very conventional for a retirement portfolio. In fact, it's kind of wacky. It's not something I recommend. So I don't want anyone, especially my viewers, to lose money trying to emulate my strategy because it's pretty risky for someone who's living off their investments. So it's something I haven't talked about for the last year, but I'm going to share this. I'm going to share my investments and my investment strategies because viewers are asking about it. So let's start out with a disclaimer, right? The information in this video is for informational purposes only and for fun and education. I'm not licensed or qualified to provide investment advice. Right? So if you need investment advice, you should probably contact a fee-only investment advisor and pay for a plan and a strategy and all that. I don't recommend the assets under management strategy for most people because giving up 1 or 2% of your assets per year is pretty expensive advice. So anyways, for most retirees, I just want to say I recommend a more traditional strategy, right? And there are some good YouTubers that I trust, and two of them are Rob Berger and Joe Kuhn. You know, these guys, they present a more conservative approach to investing than I take, and this is something that's probably more useful or helpful for someone, the average investor in retirement. So, by the way, quickly, I just want to say that I've noticed lately that I've gotten a lot of female subscribers, and I'm really happy about that. You know, it was kind of a boys' club around here early on, and so I just want to welcome you, and I want to say, welcome to my channel. I hope this information helps you out a lot. Most people don't realize this, but statistically, women have more retirement challenges than men. So if there's any way I can help, please feel free to let me know in the comments. Okay, asset allocation. So the first question I always get is about my asset allocation. How much do I have in stocks or bonds? You know, do I have a 60-40 portfolio or a 70-30 portfolio or something of that sort? To be honest, I really don't track it very carefully. I'm not so concerned about my asset allocation. When I was saving up for retirement, what I did was, especially at the end, I put most of my 401k contributions in a target date fund. And I let those guys worry about the asset allocation. And for people who don't know what a target date fund is, you pick a date. Mine was specifically 2030. And then they adjust the amount of allocation dynamically. As the people in the fund get older and closer to retirement, they shift more towards bonds and cash and less towards stock. And I know it sounds like a lazy way to deal with asset allocation, but it worked for me and it works for millions of others. So target date fund is what I used instead of trying to manage my own asset allocation. A couple of years ago, I suspected interest rates would rise, and because they were down so low forever, and they might clobber bonds, to be honest. So I mostly avoided them. And besides, bonds weren't yielding very well compared to stocks. So I had most of my assets allocated to stocks for obvious reasons. And by the way, that's exactly what happened. Bonds kind of got clobbered for a little while there. And what I didn't expect was the crazy high inflation. And that's not very friendly to cash and cash equivalents like money markets. Those were getting clobbered. So having been mostly in stocks and stock funds lately, it's helped me avoid a lot of that mayhem, and I actually have done pretty well. Not something I recommend once again. Risky bet, but it paid off for me. So, to sum it up, I won't recommend a specific allocation to anyone because I'm pretty aggressive, especially for a retiree. But off the top of my head, this is what I will say. If someone is approaching retirement age and they're worried about a market crash that could jeopardize their ability to retire or their ability to eat after they retire, a target date fund might give them some peace of mind. It might be a good bet. It dynamically reallocates, and it's something that a non-sophisticated investor could help them quite a bit. Now, on the other hand, if someone's younger, right, and they're far away from retirement, they're not trying to do early retirement in their 30s or something, and they're in their 20s, 30s, or 40s, they may get a much better rate of return in an index fund or something that's more aggressive. And being mostly in stocks is something I recommend for people who are younger. You have a lot of time to recover, you can afford a lot of risk, and you need that really high investment return. I talked about that in one of my other videos about leaving the 9 to 5. And so I explained why you need the highest return you can get, especially when you're young, so your money keeps doubling. So let's talk about this year, right? 2024 is an election year. And that's a big deal to me, and I've decided to be aggressive this year. I've done really, really well in the last couple of election years, especially the presidential election years. And so I'm going to let my investments ride. Even though the stock market's at or near record highs, I'm letting it ride. I have a feeling it's going to go up this year. Am I going to be rewarded for this, or am I going to get clobbered? Only time will tell. But one thing for sure, stock market has gone up for 20 of the last 24 election years. And that's a pretty solid bet. You could still lose, but it's not a sure thing. But I think it's worth the risk, right? And so I'm going to take that risk this year. And then after the election's over, I'll probably get a lot more conservative. Let's talk about risk management, right? I've been investing since 1985, and I have a way higher risk tolerance than most people, even most investors. But now that I'm retired and living off my investment, it's probably a bad idea. It's probably a bad thing. But I know for certain there's risk also in being too conservative. Like I was talking about cash and bonds earlier. If you underperform inflation, your portfolio shrinks in real dollars or euros or whatever, and your purchasing power just erodes away. So I don't think the investing goal is tolerating risk. I think it's in managing risk. And risk can be managed, and that's something that I do recommend for everyone. And so here's what I do. I use a bucket strategy. So this is one of the ways I manage my risk. While still expecting the inflation beating return, this has helped me. So my bucket strategy is something I don't recommend because it's very primitive at this point. But I plan to prove it next year after the election and the year's over. So here's my bucket strategies for 2024 and 2025. Once again, I want to say I don't recommend this strategy for anybody else, but this is what I'm doing, and so I'm sharing it with you, and I'm the one who's going to have to live with the results. Don't follow me. So for 2024, right now I only have 2 buckets. I have one bucket with a year's worth of money market, and the rest, 95% basically, is in stocks and stock mutual funds. Now about 10% of this is in the target date fund. So there are some bonds and cash equivalents included, probably about 30% of the 10%. So it's still pretty small. But it's very risky, and I'm sticking with it throughout the year. Not something I recommend for anyone else. 2025, next year, I plan to have a more traditional strategy with 3 buckets. I'm studying fixed asset investments, and I'm going to create my 3rd bucket with investments that aren't as sensitive to market fluctuations like stocks. But at the same time, I'm not going to buy like a bunch of treasury bonds or something else that are at or below the rate of inflation. I don't intend to lose money, put it that way. I'm looking for fixed income investments that have higher yields. And I'm following a guy right now called Armchair Income who's got some interesting stuff. and I'll put a link to his channel down below. So another thing I plan to do is I plan to increase my money market to about 10% of my portfolio. So I have 2 years of dry powder instead of 1. I'll take a hit on that in the case of return, but it should at least yield around the rate of inflation. So that's the way I'm going to improve my bucket. So just let me know what you think of my investment strategy in the comments below, and then let's wrap it up, right? So in conclusion, I just want to say that everyone has a different financial situation and different tolerance for market risk. And no matter what your investment strategy is, or no matter what investment strategy has been recommended to you by anyone, including a financial advisor, if it doesn't feel comfortable to you, if you feel like it's risky in the pit of your stomach, man, don't do it. Don't do it. Losing money is never fun, and I've done it plenty, so trust me, I know. And it's especially devastating in retirement. It's nearly impossible to recover from big market losses once you're living on a fixed income. So that's my advice, is make sure you're comfortable with it before you do it. Okay, made it to the end of the trail. It's about an hour each way. Really pretty. Loved it. It's spring, everything's green, so had an awesome time. So anyways, we will see you next week on our next big adventure, and I wish you all health, happiness, and prosperity in your lives. Talk to you soon.